Welcome back. Today's was more a credit or a banking policy than a monetary policy. Reserve Bank has allowed banks to fund acquisitions, something it never allowed before, lend more to large conglomerates, which was capped, has proposed to reduce the capital to be set aside for MSME loans and mortgages. It has also eased loans against shares, loans against debentures, loans for IPO financing. I mean, a whole host of controls removed. To understand how life changes for bankers and how it might help markets and macros, I have with me the biggest banker of the country, SBI Chairman Srinivasulu Setty. Mr. Setty, thank you very much, sir, for finding time for us on what must be a terribly busy day. Would you say that the Reserve Bank's overall attitude has changed? Two policies ago, they gave that big CRR cut. Now they're removing even more constraints. Is it that they've now decided to make banking market-oriented and commercial entities rather than a bit of a handmaiden to social policies?
Thank you, Lata, first of all, for having me on your show. We cannot miss your show anyway on the MPC day. I think most of the regulatory actions all across the globe are dependent on the current environment, the situations which are prevailing. I'm sure RBI has a greater confidence in the robustness of the banking system today. And some of the measures what you have mentioned, particularly in relation to 22 different measures what the governor has announced, are far-reaching, and some of them have been a long-standing request from the industry, the measures also have removed some of the overhangs, particularly on the ECL side, forms of business side. I think there's a greater amount of clarity in terms of what is to expect from the RBI now. And in my view, I shared with you also separately that this is one policy measures we can say that is a kind of banking reforms which have been awaited for a long time.
Yes.
But as I mentioned, I think it is also enabled by the environment, the strengthening of the banking system, what we are witnessing, benign asset quality. And also some of the measures have been there for quite some time. What you mentioned about specified borrower, for example, 10,000 crores for the banking system. It was issued in 2016. Ever since, the credit by the banks has almost 2.5 times has increased. Obviously, these are the measures I believe are very, very important, and they will increase the credit flow, number one, and consumer protection is something what the governor again spoke about. Ease of doing by the exporters.
All those are important.
Measures are all encompassed.
Okay, from an economy, say, capex point of view or from a banker point of view, pick out the one which is going to make a big difference to you.
I think for me, for the banking system as a whole, allowing financing M&A activity is a greater confidence which is reposed in the banking system today, Indian banking system. While the overseas banks were permitted to be financing the M&A activity by the Indian corporates for acquiring Indian companies, for a very long time, almost 2 decades, I think Indian banks have never been participating in this. So I think it is also important to understand that the corporates today some of the corporates have very good cash balances. Obviously, they all will be looking for an opportunity to acquire companies which strategic to them. And such acquisitions were off bounds for the Indian bank.
That's it. So, I'll tell you, I remember, I think it was Dr. Reddy, it was 2004, if I remember right, that this bar on acquisition finance came. And at that time, the Reserve Bank had explained that, in India, capital and savings are limited and we need growth. So let banks finance growth rather than helping one promoter get another promoter's, assets. Let's use this scarce capital more for growth. That was their intent. But separately, I wanted to ask you, will it spur M&A activity in India? Are we going to see a lot of consolidation? Because we are seeing new groups. We are seeing a lot of industries where there are, say for instance, cement. There are a lot of cement companies. There are multiple paint companies. Do you think M&A activity is going to just take off?
The M&A activity is already robust. If you see the numbers, in the calendar year 24 itself, the overall M&A activity in India has been almost $120 billion worth M&As. And in the current year, in calendar year 25 itself, the M&A deals aggregated to $42 billion. And none of the Indian banks, even assuming that some of them are funded by partly debt, we have not been there. More than whether the Indian banks' participation will spur the M&A, for the simple reason that this one particular activity was not accessible by the Indian banks, that animal is removed now. I think we have to see from that angle. And from a capital perspective, today the Indian banks' capital ratios are robust, and both the corporate balance sheets as well as bank balance sheets are in a good shape. I think we'll have to wait for the framework to come. There could be some guardrails, obviously. I think we'll have to see that what comes out, but it's a definitely a good move in my view.
Yeah, best of times perhaps to start this process. So what about the reduction? The Basel III standardized capital norms will come, and that Reserve Bank clearly said that it will mean lower capital requirements or risk weights for MSME loans and residential real estate. Do you see that's a very spur to macros?
Yeah, that's very positive. Particularly, I think MSMEs also are being funded by mainstream banks in a big way today because of the data availability. There's a good amount of confidence in lending to MSMEs. And capital should not be a constraint now, with some rationalization on the risk weights would definitely help. As far as home loans, which is the fastest growing area again, and today it is a high performing asset ratios in the home loan sector. I think that also is giving a confidence, and Basel III implementation, aligning the global practices to Indian context, is a good move on that. And one more, I think, thing which I would like to mention from these measures, Lata, is about the DICGC premium. I think we've been asking for quite some time that the risk-based DICGC premium is something what banking industry has been asking. Again, I must thank RBI and governor to have a fresh look at this. I'll tell you that backdrop of this. Today, the largest overhead in any bank book is the DICGC premium.
Okay.
And for instance, SBI alone has paid in last year 5,400 crores DICGC premium.
Ooh, okay.
So, and you're not distinguishing between one bank and another. Obviously, there is a need to do that, and it's a quite important measure in my view.
Okay. Well, just for those of us who don't know the abbreviation, what the chairman is referring to is the deposit that banks pay on insuring deposits. The premium that they pay to insure deposits. Now it will be risk-based. That is, strong banks will have to pay lower insurance. It will become market-based. So that's very good for strong banks and banks perceived to be strong. Mr. Setty, have to wind up, but I want to finally ask you, do you want to give a higher, loan growth forecast, given the fact that so many avenues have been opened up for you and demand also has been spurred by GST cuts, etc.? Do you want to raise, or do you think that, they have smoothed the rules for you, but ultimately, who is to say that growth will come?
Well, it's not only about smoothening the rules for the banks. I think this host of measures which were taken in the past also, for example, the CRR card and the GST, we have to see it as a holistic measure. And all these measures, I believe that, are going to spur the credit growth. If not, I can't venture on the SBI growth rate because we're on the silent period. But from the system perspective, definitely, from 11 to 12% growth rate, what we were looking forward to, at least 1 to 2% uptick will be there.
Okay, that's a very big headline you're giving us, Mr. Setty, when a person who has over 25% of the banking sector says that the sector will grow by 1 or 2 percentage points more in terms of loan growth. That's a very big positive for the macro. Thank you very much, Mr. Setty, for joining us and parsing so many of the steps announced by the Reserve Bank. Really, what Mr. Setty says should hit home. This is a banking reform policy, and we should see the impact in the days to come. Wrap up on this very special broadcast, but stay tuned. More news and updates are lined up for you.